In today's lesson, we are going to look at how to prepare bank reconciliation statements. I said we are going to look at how to prepare bank reconciliation statement. But before then, I would like to bring our mind back to what bank reconciliation statement is and why do we need to prepare bank reconciliation statement. First of all, bank reconciliation statement is a statement that is prepared to reconcile the difference or the discrepancies between the cash book and the bank statement. It becomes very necessary to reconcile the cash book, and the bank statement, because there are transactions that will make the cash book not to be the same thing or to be equal with the bank statement. Transactions like unpresented check, uncredited check, credit transfer, dishonored check, standing order, dividend, and so on and so forth. These transactions can actually make the bank reconciliation, the cash book, not to be the same thing, the balance of the cash book not to be the same thing with the balance of the bank statement. And then if you are looking at this video for the very first time, there is also need for you to understand what a cash book is and what a bank statement is and what link them together. Why do we need to reconcile them? Cash book is a book that is prepared for cash or check receipts and then for and cash or check payment. Let me say that again. It is a book that is prepared to record cash receipt or check and then payment on check or by cash. So if you are a businessman or a businesswoman and then you are transacting business and the transaction is centered on cash, the book that is used to record such a transaction is called the cash book. And then for bank statement is the book that is prepared by the bank. The bank must prepare a book that will record her transaction with her customer. If the bank opened an account with a customer, they believe that every transaction that the customer is making with the bank is written somewhere. So for record purposes, the bank must also record their own transaction. So the bank prepared to record the transaction between the bank and the customer is what we call the bank statement. So, normally or traditionally, the bank is expected to send what we call bank statement or statement of account to their customer at certain period of time. Sometimes it can be the end of a month, sometimes maybe at the end of 2 months or thereabout, depending on the policy of the bank. So if this statement is sent, the essence of sending this statement is just for the customer to have an idea of the transaction that has transpired within the period under consideration. So when this bank statement is sent to the customer is expected to compare the cash book at home with the bank statement that is sent to them. So sometimes they may send, by the time they make this comparison, there may be discrepancies or there may be differences between the balance of the cash book and the balance of the bank statement. So the bank reconciliation statement is now there to reconcile or to bring together the differences between the cash book and the bank statement. Now let's go back to the topic. We said how do we now prepare this bank reconciliation statement? A lot of students usually find it very difficult to prepare this statement because you must understand the differences or the reasons for the differences before you'll be able to prepare this bank reconciliation statement. Now, bank reconciliation statement can actually be dealt with from two methods. Like you can prepare it in two ways. The first method is what I call method 1. This method, you prepare only the bank reconciliation statement. You just prepare the bank reconciliation statement and then adjustment of the cash book the cash before the bank reconciliation statement. What do I mean? What I'm saying is that the bank reconciliation statement is just going to be prepared. The adjustment that has to do with the cash book before the bank reconciliation statement is not necessary. Now let me take us to a format or how you can actually prepare the bank reconciliation statement. How does it look like? If you are preparing bank reconciliation statement, if you are preparing bank reconciliation statement, what you should do under method 1 is that first of all, you prepare the bank reconciliation statement. If you are starting with cash, then you are not going to make any further adjustment on the bank statement. If you are starting with bank, you are not going to make any further adjustment with the cash. You are just going to make the bank reconciliation statement. And then you are going to start with balance as per the cash book. Now let's quickly look at it. If you are preparing bank reconciliation statement, let's assume we are preparing this bank reconciliation statement of ExamGuide. So we can say bank reconciliation statement of ExamGuide Now, this will be the caption. This is what you are doing. It is called bank reconciliation statement of ExamGuide. Anybody that look at this statement will know that you are going to reconcile the books that belongs to transactions that are transpired in ExamGuide as a business setup, as a company. Now, what you're going to do is, like I said before, under method 1, you can either start with the balance of the bank, or you are going to start with the balance of the cash book. Let's start with the balance of the cash book. So you come here and you say, they are doing the reconciliation. When are we doing it? As at 31st, let's assume is December 2022. This is when we are doing the reconciliation. Now, we want to start with the balance of the cash book. So you come here and you say balance as per cash book. Balance as per cash book. We are using a Naira sign because we are going to, the transaction is believed to be carried out on Naira or in Naira. Now, balance as per cash book. Let's assume we have 50,000 here. 1, 2, 3. And then because we are going to look at the cash book, what is expected of you to do is that every transaction that has gone out of the cash book that has not entered into the bank will be added back. What did I say? I am saying that transactions that has gone out of the cash book, or transaction has been credited to the cash book that has not been debited to the bank's account will be what? Will be added back. And one of such transaction is what we call unpresented check. So you write add unpresented check. Let's assume is 1,000. Now, unpresented check, this is a check that has been issued out in favor of a customer, but the customer has not taken it to the bank. So at that point, the balance of the bank will be what? it will be higher than the balance of the cash book. So to balance or to reconcile that discrepancy, you are going to add this cash, this particular check, back to what? To the cash book. And then the next thing you are going to do is, there are transactions that has actually entered into the bank account that has not entered into the cash. What did I say? I said there are transactions that has entered into the bank account that has not entered into the cash book. Example, dividends. So you add dividend. The next one is what we call credit transfer. Credit transfer. Now, dividend is a payment that is made straight into the bank account. This money is already in the bank account, but it is not in the cash book. So you are going to add it back to the cash book. And then credit transfer, money that is transferred straight into your account. Of course, when money enters your account, sometimes you may not even get the alert because of network. The money is already in your account, but you have not gotten alert. Sometimes when the bank statement will come, that's when you know, on so date, Uncle Paul sent me 20,000. Wow, thank God. That money that has been transferred into your account without your awareness is what we call credit transfer. So to balance or to reconcile the difference, since the money is already in your bank account, you are going to add it back to your cash book. So let's assume that your dividend here is 500, and let's assume credit transfer is what? 300. So let's add. If you add, here you have 1,800. You bring your 1,800 here, and then add 1,800 to your 50,000, and then you will have 51,800. Now, having arrived at this, we are now going to subtract transactions that has entered into the cash book, but it has not entered into the bank account. One of them, you are going to subtract them. You are going to say less. That transaction is what we call uncredited check. Let's assume that this check is 10,000. Uncredited check. This is a transaction check that you have received. Your customer has actually given you this check. You have received this money. You have added this money to your cash book, but you have not. Maybe you have taken it to the bank, but the cashier has not added it to your bank account. So at this point, you will see that your cash book will be higher than your bank account. So to reconcile it, you are going to subtract it. Now, after you have done this, the next transaction that will come, you are going to subtract every transaction that has been subtracted from the bank account. There are transactions that have been subtracted or that have been deducted from the bank account. I have mentioned it, the likes of bank charges, bank interest, debits, and direct debit. So you list them here. They are plenty. Number one, we call it bank charges. Let's assume this one is 200. Bank interest. This one, let's assume this one is 100. Let's take standing order. Let's take this one is 300, and let's take the last one to be debit, direct debit. Direct debit. Let's take it to be what? Let's take it to be 400. Now, when you add everything here, 10,000, this is 2, 3, 6, 1,000. That's 11,000. You have your 11,000 here, 2, 3. Now, you are going to subtract your 11,000 here from your 51,800. So you will be left with what? 40,800. 40,800. 40,800. This is what we now call balance as per bank statement. All right, somebody will ask me, you see, how do I now know? So at what point can I now say that, okay, I have reconciled the cash book and the bank statement? Very interesting question. This is just a sketch, it's just an illustration. And mind you, before I answer that question, don't forget that transactions that must come here, they are not limited to unpresented check, dividend, and credit transfer. There are some other transactions that needed to be added, but because of space or because of time, we are going to limit the lesson to this. Now, sometimes there are some transactions that the examiner will introduce, like what I will call undercast of the cash book, overcast of receipt side of the cash book. These are transactions that can also come up. But don't forget, when the receipt side of the cash book, is undercast, that means the figure there is what is counted or what is calculated is less than what is there. That means it needs to be added. So in that case, it will come here. But when it is overcast, it will be subtracted, and so on and so forth. So now, what usually happens is that they will give you the two balances. They will give you the balance of the cash book and they will give you the balance of the bank statement. But when you have calculated like this, you will use, if you are using the balance of the cash book, you start with the balance of the cash book. The balance you are going to arrive at here must be equal to the balance of the bank that is given to you in the question. We are going to look at some examples that will really give us a clear view or that will further explain what I have said so far. But I want you to understand something. I want you to understand that anytime you are preparing, you are using method 1 to prepare bank reconciliation statement, you are just going to make it straight. There is no adjustment like I have said so far. Say this method is centered on the following. Number 1, only the bank reconciliation statement is prepared. We can start with either the cash book balance or the bank statement balance. There is no adjustment of the cash book. As you can see now, I started with the balance as per cash book, and then I ended with the balance as per bank statement. Whatever you have here must correspond with the bank statement that was given to you. Now, let's quickly look at how it looks like. Let's go to our exam guide. Let's quickly look at our exam guide. There are some questions we are going to solve right now that will further explain what we have done so far. Now, when you click on your exam guide, you'll be seeing options. Now, if you see WAEC, and then you see practical theory, and then you see objective. If you click on objective, it will take you to this particular page. And then because what the subject matter is accounting, that's why the accounting there is clicked. And then when you click on account, you see options. You see the year. The year there, we are choosing at random because we want the system to give us a question that relates to what we are doing. And then once you get to that level, you just click on get started, and then the questions will come up. Now, if you look at question 1, it says use the following information to answer this question. Look at this table. They gave us unpresented check to be 85,305 naira. The balance as per bank statement is 206,865, and then balance as per cash book is what? 144,495. They don't say uncredited check amount to dash. Very interesting question. Now, if you observe that question, you will see something very surprising. You will see that they didn't even give you the uncredited check. They only gave you balance of the cash book and balance of the bank statement. So what do you do? How are you going to arrive at the answer? A very simple procedures. Now, what you will do, first of all, you know that we are either going to start with the balance of the cash book, or we are going to start with the balance of the bank statement. Since our illustration was on balance of the cash book, let's start with the balance of the cash book. So what is going to happen there is that you are going to write your bank reconciliation. I'm just trying to show you how you'll be able to get this answer. But if it's under exam condition, with your calculator, you can easily get it. But for the sake of this lesson, let me take my time to explain. First of all, your bank reconciliation statement, your bank reconciliation statement. Your bank reconciliation statement is, you write that, and then balance as per what? Cash book. Let's not forget our 2 naira sign. This balance as per cash book is how much there? We have 144,495. 144,495. 144,495. All right. Now, the only transaction there we have there is what? Is bank, okay, unpresented check. So you're going to add unpresented check. Unpresented check. Is how much? Unpresented check here is 85,305. 85,305. If you add 85,305, if you add 85,000, you have 144,495. If you add it to 85,305, you have, your answer is 229,800. This is what you have. Now, ordinarily, you are supposed to subtract less uncredited check. But they didn't give you, this is what you are looking for. Let's make it an X. This is what you are looking for. They didn't give you this. Meanwhile, your balance as per bank statement is given, which is what? Which is 206,865. So mathematically, this one is just mathematics. You have arrived at this. This is what you have given this. This is what you are looking for. So very simple. If you subtract this from this, you will get this. So let's quickly go. Let's subtract. Let's do a subtraction now. 229,800 minus 206,865. What is our answer? Our answer is the answer is what? 22935. 22935. Let's look at the options given. 22935. Now, if you look at the option, you see 22935 is option D. So option D is the answer. 22935. All right, let me explain something. You know that this kind of question cannot come as theory. It must come as objective. And what the examiner is looking at, the examiner is trying to find out your level of understanding of what uncredited check and unpresented check is. Please, unpresented check must always go with balance as per card, must always be added. Why uncredited check must always be subtracted? Because unpresented check is check that has been issued out in favor of somebody, but the person has not taken the check to the bank. Why uncredited check is check that we have received, but we have not taken the check to the bank. So that's that. Let's quickly look at another example. Okay, I want something that... All right, let's look at question 4. It says use the following information to answer this question. Balance as per cash book is 84,000. Bank charges 300. Standing order paid 2,500. Unpresented check is what? 2,800. They say the adjusted cash book balance is... Okay, this is adjusted cash book balance. I have said from the beginning of the lesson that we will not look at adjusted cash book. We will concentrate on a question that has to do with preparing bank reconciliation statement without adjusting the cash book. Without adjusting the cash book. Okay, let's adjust. Let's look at the question 4. I think there is something I need to point out here. Let's look at question 4 again. Let's look at it. Let's look at it. Question 4. Let's look at question 4. Now, question 4. Question 4, they have given us balance as per cash book. They have given us bank charges. They have given us standing order. They have given us unpresented check. I'm going to look at it in 2 ways now. First of all, let's assume that we are going to prepare bank reconciliation statement without adjusting the cash book. And then we are now going to, after that, we are now going to adjust the cash book. If I'm preparing bank reconciliation statement straight, I will come here and I'll write my bank reconciliation statement. And I will write my balance as per cash book. My 2 naira sign, I won't forget this. So if I'm writing this, what is the value for that? That's 8,400. 8,400. 8,400. Now, you add your unpresented check. Unpresented. Unpresented check here is 2,800. 2,800. Now, add 2,800. This is 0. This is 0. This is 12. You carry 1. This is 10, 11. That's 11,000 what? 200. Correct. Now, this is what we have arrived at when we added unpresented check to the balance of the cash book. Ordinarily, we are not supposed to less uncredited check. But uncredited check is not given in the question. So, since uncredited check is not given, but there are transactions in the question that has been deducted from the cash book, that has been deducted from the bank statement, that has not been deducted from the cash book. What do? We deduct it. Number 1, bank charges. Bank charges. How much is bank charges? Bank charges is 300. That takes us to the first naira sign. That's 300. The next one is what? Standing order. Standing order. Standing order is how much? Standing order is 2,500. So if you add this, you have 2,800. Subtract this from this. When you subtract 2,800 from 11,200, what are you going to get? You are going to get 8,400. This will now be the balance as per what? Bank statement. You see how interesting it is? Look at this. As we have arrived at balance at what? Bank statement. But in the question, it was not given. So you see now, we've been able to deduce this because we have followed the procedure. The bank reconciliation statement is, if you follow it like this, even if the bank statement is not given to you, you can deduce that. Look at, we have been able to deduce it, but that is not what we are expected. The question is, the adjusted cash book balance is what? Dash. Now, when you want to adjust the cash book, I want to say this now. When you want to adjust the cash book, remember, what are you adjusting? You are adjusting the cash book. That's method 2 that I mentioned earlier. But let me just throw a light on it before we look at the next example. When you are adjusting the cash book, the only transaction that will not reflect in the adjustment, they are, number 1, unpresented check. Number 2, uncredited what? Check. These 2 transactions does not reflect in the adjustment. So every other transaction in the question will be used, but this one will not be used. So if we are adjusting the cash book, the cash book look like this. Let's use T format. It looks like this. This is the cash book. This is your credit side. This is your debit side. This is your Naira sign. So the balance brought forward from the question is what? 8,400. 8,400. Meanwhile, you know that there are transactions that have been deducted from the bank statement, that those transactions were not deducted from the cash book. So what do? Just subtract them. Number 1, bank charges. So you come here, you write your bank charges. How much is bank charges there? 300. The next one is what? Standing order. Standing order is how much? 2,800. So you close your account. This is how to close account. When you close your account like this, now 8,400. 8,400. We are not going to look at how to balance an account now, but anytime you have an account like this, you add the debit side, you add the credit side, and then compare. Why I have 8,400 is because this side is higher than this side. Then if you add this to this, that's 2,800 plus 300. You have 0. This is 11, 1, and that's you have 3,100. Now 8,400 minus 3,100, 0,035. You have 5,300. 5,300. This is 300. This is 2,800. When you add, you have 3,100, and then subtract your 3,200 from 8,400. When you subtract, you will be left with 5,300. So this is the balance carried down. This is what we call the balance carried down. This is what will be used to now prepare your bank reconciliation statement. At this point, this is what you are supposed to get as your bank. Okay, this is not 2,800. The question, this is 2,500. So 2,005 is going to be 2,008. 2,005 plus 300 is 2,800. So you are going to have 5,600. So your answer here is what? D, 5,600. Please, let's be very careful with the figures, because most times what you are seeing in the question may be different from what you are writing, and it will always give you the wrong answer. So anytime you check, you are done with your solvings and you check and the options, your answer is not there, check your work again. Maybe you have written just the mistake I made now. I wrote 2,600 instead of 2,500. Please, very important, because in accounting, figures count. So when you add 300 to 2,500, you have 2,600. This 2,600 will be subtracted from this. So 8,400 minus this is 0, this is 0, and then you are subtracting 1 from here to here. You have 1 from here to that's 14, then minus 6. 14 minus 6, 2,800. 2,800. 14 minus 8 is what? Is 6. And then you'll be left with what? What will be left? There will be left with 7 here. 7 minus 2 is 5. That's why we got 5,600 here. And then this 5,600 is your balance as per adjusted cash book. All right, so the answer there is what? Is D. Let's look at the last question. Okay, let's go to question 6. Question 6, they say balance as per cash book is this: dishonored check, bank charges, unpresented check. The adjusted cash book balance is, let's look at this last question. Like I said before, I have said that when it comes to adjustment, when you are adjusting the cash book, you shouldn't include unpresented check. So from this question, the transactions that are here now, the transactions that are here that will be needed, we will need dishonored checks and we need bank charges. So let's write our cash book again. This is your credit side, this is your debit side. The Naira sign. The balance, your balance brought forward is how much? Balance brought forward there is 18,000. Is 18,000. 18,000. That's our balance brought forward. And then dishonored check. Why you are going to add dishonored check to this is because this check has already, you have received the check. Okay, you've given out the check, but the check was actually dishonored. So you add it back. Add it back to your cash book because the check is dishonored. So add it back. So you have dishonored check. Your dishonored check now is how much? 1,200. And then you have your bank charges. Bank charges there is how much? 300. So let's close the account. 1,002 plus 18,000 is what? 19,200. 19,200 minus 300. 19,200 minus 300. What do you have? 0, 0. This is 12 minus 3 is 9. This is 8. 18. So you have 18,900. So your balance carried down is what? 18,900. 18,900 is the balance. This is what we call balance as per adjusted cash book. So from the options here, the one that fits into our solution here is what? 18,900. Now, having solved 2 or 3 examples to really explain what we've said so far, I want to just refresh our mind on what we have achieved so far. Now, we have achieved how to prepare bank reconciliation statement. We have said that when you are preparing bank reconciliation statement, you can either do it in 2 ways. We have said that the method of preparing this, you can achieve this in 2 ways. You can achieve this in 2 ways. We said this can be dealt with from 2 methods. Now, we have the first method is that you prepare only the bank reconciliation statement, while the second method is adjustment of the cash book before the preparation of the bank reconciliation statement. What am I saying? You either prepare the bank reconciliation statement straight, or you adjust the cash book before you prepare the bank reconciliation statement. And then we are now going to focus on method 1. When we said method 1 is centered on only the bank reconciliation statement. Now, in this case, it will be the bank reconciliation statement will be prepared either with the balance of the cash or with the balance of the what? Of the bank. Meanwhile, there will be no what? Adjustment of the cash book. So that's all that you need to know under how to prepare bank reconciliation statements.